My name is Augusto King. I work for MUFG Securities. I'm the moderator of today's panel on ESG, Growth in Asia for Sustainability. We have four very distinguished speakers from the investing community who would be giving us some insights from an investor's perspective in the growth of this market in Asia. Let me first of all give a very brief introduction of each of our speakers. First, from BlackRock, Sunita. Sunita is APAC Head of EII Sustainable. We also have Gabriel from BNP Paribas Asset Management, Head of Stewardship, Asia Pacific. Yannick from Societe Generale. He's Head of Sustainability Research. It will be very interesting to see and hear a flavor from him from a Europe perspective and his applicability to Asia. Last but not least, John Chang from Mitsui Sumitomo Insurance China. He's based in China. And I'm sure this panel will be able to give us some very interesting insights. But without further ado, maybe I should start and kick off the discussion first with Sunita. So Sunita, BlackRock is into sustainable investing, and how does this relate to what you do in sustainable indexing, and what is the prospect of sustainable indexing in Asia, and how do you see the growth in this area?
It's great to be part of this panel today. So you probably have already seen some of the announcements that came out of BlackRock from our CEO around how sustainability is our new standard, how it is integral to everything we do, starting with, of course, investment processes where we want to incorporate ESG analysis into all of our strategies, investment stewardship, which I'm sure Gabriel will touch on in his world, where we want to engage with companies and improve ESG business practices. Corporate sustainability, of course, where we think about how we are sustainable and how we operate sustainably as a firm. And finally, the sustainable solutions piece, giving investors, our clients, access to sustainable portfolios, sustainable choices for every portfolio. And this is where my role comes in. So I work in APAC, in the ETF and index side of things. And we're seeing a lot of momentum here. BlackRock has the broadest ETF platform, sustainable ETF platform. We have about 110 products, and it's growing every day. There are new product launches, and we're sitting at around 49-50 billion in assets in ETFs, plus 70 when you include index mutual funds, and still more when you include the customized index mandates we work on with our clients. So I think in the beginning of this year, you would have seen a lot of news, especially around March when the COVID was really hitting fever pitch, quote unquote, about the flows that came into sustainable strategies. That inflow story, I think that is just the beginning. We have seen that momentum continue into second quarter, well into third quarter, and we're seeing more and more investors around the region really pay attention to this space now. As you may be aware, investors in this region do care a lot about performance, and this is the first opportunity, this is the first real stress we saw for sustainable strategies. And they delivered, right? So back in 2009, there weren't that many funds out there. I think there must have been about 35 sustainable ETFs. Globally, across competitors, there's more than 300 now. So you really have enough data to see how these strategies have performed. And I think that's why post-pandemic, more and more investors are getting comfortable around incorporating these products into their portfolios. But it goes beyond that, of course. And I think when you talk about sustainable indexing, the indexing part is an inseparable part of that story. As more and more companies are disclosing more ESG data, coverage has improved, coverage of corporates, both on the equities and fixed income side, has improved immensely. sustainability. And with better data, you can construct better, more bespoke indexes that can respond to the needs of clients in various geographies. There's not one particular flavor of ESG that appeals to every single client. And now we're able to design better and better indexes and therefore better and better products that can address those needs. So I think that's a little bit of that. And once you're able to build better products with those better indexes, you end up allowing investors to construct multi-asset portfolios across equities, fixed income, and so on that are sustainable. Because our whole philosophy was around having sustainable building blocks for portfolios. So I'm very bullish. I think the activity in APAC has been very strong. Sustainability is now part of every conversation we have with clients. And so we hope that that's going to continue. We think that the numbers should be around 1.2 trillion in assets by 2029, 2030. And I am sure that asset owners and investors in APAC will play a huge role in that.
Wow, thanks. That is very exciting and certainly very very good to know. We have seen momentum picking up 2 years ago, and it has gone very, very fast. So, so maybe I should turn to Gabriel now. In sustainable investing, stewardship is certainly very important. So, what has been your experience with governments' response and corporate engagements in the region? It would be great to hear some examples from you, Gabriel.
Sure, and thanks for the question. And I'd just like to echo some of Sunita's comments in the incredible growth in focus we've seen on ESG in the region. And I think that this is not only from the investor side showing strong demand and inflows into products, but it's also from a corporate regulator and broader government focus on ESG. And interestingly, this has been for different reasons in different countries, but the direction of travel is undeniable at this stage. And if we go back 3-5 years ago, it could be relatively difficult to have broad-ranging discussions on ESG topics with either a wide range of regulators or a wide range of issuers. However, these days it's very, very commonplace, and when we conduct our engagements with companies, often they're through broad and collaborative initiatives with a lot of other investors. But even when we're by ourselves doing the engagements, we're often told that they've had similar questions from other investors, both domestically and internationally. And that groundswell in focus makes a lot of these discussions easier, because not only do you have greater confidence from the issuer around talking about the topics, but there's greater awareness that this isn't just one or two fringe investors, and that this is definitely now part of the mainstream. If we look more from a government and regulator focus, some of the key initiatives that we've seen in the region have been focusing on enhancing disclosure and also engagement with that underlying data. So one of the interesting areas in Asia was that if we go back 5-10 years relative to today, we've seen a crazy increase in ESG data, as Sunita was also highlighting. And what this means is that there's a lot more analysis that can be done on companies and a lot more transparency. The problem that this created was that often this disclosure was driven by mandatory regulation and requirements. And so what this has also introduced is the need to really cut through that data to understand how companies have been performing. And this can be done in person, it can be done with quantitative analysis, but it's really just highlighted the need for deeper analysis and deeper engagement with issuers in order to understand their strategic engagement with underlying issues.
Wow, okay, that is again great, because I guess the quality of information is always very important, you know. And now I would like to turn to Yannick. And Yannick, a lot of us in Asia do see the rapid development in Asia, and we are always looking into Europe for insights, because certainly Europe has a longer history in ESG, concepts in ESG investing. So, Yannick, from your perspective, where are we in Asia now compared to a much developed ESG world in Europe? And where are we still lagging? And what's your views about whether there's any roadblocks that prohibit Asia's further development in this space? Yannick.
Hi, everyone. Answering that question is pretty easy, I should say, because as Asia is catching up pretty rapidly, And the rationale for it is quite straightforward and simple. I believe, and we believe, that investors understand that ESG is becoming a compliance factor. So there is no more questions about, why and, what is the rationale for it, what is the benefit of ESG, but it's becoming something you need to go through to stay at the level playing field. As you said, probably Europe is more advanced in some aspect regarding ESG. And the rationale for it as well comes from three different pillars: regulatory push, asset owner push as well. We've seen a lot of, a pension fund, being institution, starting asking for ESG mandates. So this is driving the market. And finally, individuals, which came to it because they just want to align their conviction with their investment at the end of the day. So what we've seen in Asia, to be more concrete, is that over the last 5 years, we've seen dedicated ESG team build-ups. We've seen increased interest on the corporate side, definitely with more reporting, because they do understand that in a global world, you need to align with best practices. And if some countries are a bit ahead in terms of disclosure, in terms of transparency, if you want to be into a potential investable universe, you need to align with those standards. So even if the regulation is not there yet, we've seen a lot of large caps from Asia starting providing investors with a lot of CSR report, with a lot of insight, and trying to align with best practices. So that's why our understanding is, yes, Asia is still a bit behind, but it's catching up pretty rapidly. The only limit, you were talking about roadblocks, will be about, cultural biases, I should say, because there is still no clear definition and global understanding of what is at stake on the space of ESG. And this is where you will find differences. I'm not sure US investor, European investor, and Asian investor do share the exact same visions in terms of importance of ESG criteria, in terms of the right metrics to be used to the analysis. But I'm pretty convinced that we will get there. There are a lot of global initiatives trying to push for some kind of standardizations. But I still believe that at the end of the process, there will be insight, to identify out of, ESG aspect. And all this is very much related to performance and better risk management at the end of the day. So as we used to say, investors are pragmatic animals. And as such, if you show them the relationship between, good ESG practices and financial benefits as a whole, everyone will get there.
Yeah. So both Sunita and Gabriel talk about the information, the availability of information. So from your research cap on, do you think we have sufficient information now in Asia, and are those information reliable to what you have been doing under the European framework?
I should say not yet, for two reasons. First, it's becoming almost mandatory, for all CSR report to be audited. So it's not only, disclosure coming out of a company on whatever aspect, but you need to show hard proof that what you are talking about on the ESG space, first, is financially relevant, and second, have been controlled in a way or others. So it was the case in Europe back a few years ago, but I think it will come to Asia and will be more standardized. The benefits, I should say, from being a bit late on that space is that you already know what has to be done. What are the right framework, what are potentially the right information to disclose. So if there is a need and a will, to move forward this, the catch-up will be potentially easier and take less time than it took in Europe.
Okay, thanks. So I guess we are moving in the right direction. So which is great. So maybe I should turn to John now, and John is actually based in China, run the business in China for Mitsui Sumitomo Insurance. So maybe John, China is known for being a large issuer or large supplier of ESG bonds, both offshore and onshore. And as you are based in China, how do you find sustainable investing in China? Do you have enough opportunities as an investors, and does the quality of those products available meet the standard that your head office set upon you?
Yeah, it's good, very good question. That actually in China, in last year, especially in 2029, in China we have issued about 1.5 trillion green bond. That means 39%, close to 40% of world market. But from my personal view, it's really, really hard to China to make the decision. The most important reason is that disclosure, the information disclosure. Although we have so big market, but unfortunately, there's only 95, I give another figure, only 95 mutual funds we have featured with ESG investments in the market. That means only 2% of the total assets of the mutual fund market. And we have only 43 ESG featured stock index in China, and only provide very slightly high return and stability in the whole market. And I think that another point is that just the disclosure, information disclosure, just I said. So in China market, we have 3,600 listed companies, but unfortunately, we have only 25% of the total market, total companies issued annually CSR or ESG related annual reports. So we have not enough, to be honest, I think we have not enough information to make good investments or judgments, to be honest, I'd like to say. But in the future, I think it will change a lot. As you know, in China, the government pretend a very, very important role. And the government nowadays is thinking about the new guidelines, investment guidelines on the ESG. They also encourage the investor associate, security associate, and the mutual fund associate to give some associate guidelines on the ESGs, and they do more research on ESGs and provide more I think bring up the whole market to thinking about, to all focus about the ESG, to make the market more prospective. So this is the situation in China. Thank you. Yeah.
I actually have one more question for you, but I'll put it towards the end.
Please.
For now, I would like to turn back to Sunita. So from, again, looking at it from an investor perspective, as an institutional investor, certainly you can invest globally, but do you think Asia now provide enough product for investors that are interested to support the ESG agenda? And how does the wealth management and private banking investors thinking? Are they also starting to invest as well in this particular class?
So yeah, you're absolutely right. You think about the client segments, the needs of the institutional segment, the asset owners, is different from the rest of our client base. And as you rightly said, the institutional clients that we work with are looking at the entire space of sustainable products that are available to them across active and passive, across different jurisdictions. And so we really, it's just sitting in Asia, our role is to demystify this space. And so our conversations are much more global and holistic in nature, and really working with clients to understand what are their exact responsible investing requirements and how we can find the right products or customize or create new products to meet those client needs. So that's one aspect. I think the private banking and wealth space is certainly very clued into this, and I would highlight Singapore, Hong Kong, Australia, definitely as bright spots where we are seeing a lot of activity, a lot of interest to direct capital and invest sustainably. I'm sure I don't need to quote any of those statistics you've already read about millennial clients and how millennials and Gen Zers are more inclined to invest invest sustainably and more inclined to defer in the ways they bank from their parents and grandparents. And so I think private banks, the wealth segment, has really embraced that. They've really tried to create sustainable platforms to make products available for their clients to access. And certainly we spend a lot of time talking to wealth participants like robo-advisors, private banks, and see how we can help them approach and offer products to their client base. With regards to the local product, the product base, I think it's definitely it is smaller than what you would see in Europe or US, but there is definitely room to grow. And I think there are certain markets where we would see potential to launch products locally as they can address a certain local demand. So whether it's addressing certain local markets or figuring out certain exposures that make sense locally. I mean, we need to watch this space and see how it evolves, what local flavors evolve into, what local regulations evolve into, and be practical about what we do in these markets. So yeah, watch this space.
Right. So because we are also seeing a lot of local markets activities as well. Recently we have seen, like, for example, in Thailand, the Minister of Finance issue, quote unquote, their first green bonds. And then as a result, it's backed a lot of other issuances from SOEs in Thailand as well. But these are very strong local market play. So looks like the governments, in Asia are also trying to develop a domestic framework to cater for those investing opportunities. But maybe I should change the topic a little bit here now. I want to also look at the regulatory part as well. And if I may turn to Gabriel, and again, if you look at ESG, it is a very hot topic for governments in the region. So in your interaction, just to carry on to what you mentioned earlier. So what are your thoughts about the regulatory initiatives so far across the region? I'm sure different governments have different approaches, but are they effective? What has been working and what is not working that well? What's your opinion, Gabriel?
Sure. I think that your comment that they're varied across the region is a very, very accurate one. That we're seeing different areas of focus, but if we think about it from a higher level, you can probably lump it into three general categories of action. One is on policy direction and support. And so this can be more explicit guidelines or policy statements or government actions, such as issuing sovereign green bonds or encouraging a nationally linked pension funds to encourage ESG investing. The second area is around disclosure and data quality. And interestingly, the debate is shifting from availability of data to quality of data and the link to governance. And this is embedded within some of the TCFD recommendations, but really highlighted by Hong Kong Exchange's recent requirements in order to put more board involvement around determining what issues are material for a company to look at and not just treating it as a compliance exercise and treating it as more of a strategic exercise. So we're seeing more and more of those sorts of issues. The emerging issue in that area that a lot of governments and regulators are grappling with is what to do on the taxonomy framework and what actually classifies as green. And we've seen huge advances here across the region, and notably with China's new catalogue coming out and removing some more controversial elements around what could be labelled as green. We're seeing initiatives from Singapore, from elements of Hong Kong, from Malaysia, from a lot of different countries on trying to answer these questions to help direct the capital. And then the final area of focus is really around capability building. And we're seeing that if we go back 3-4 years, with sustainability not having the same focus it does now, there can be, in some instances, talent gaps at whether it's issuers, whether it's investors across the entire market around trying to rapidly build capability to meet all of these disclosure requirements and to be able to enhance the strategic focus of the companies on these sorts of issues. So I'd say they're the main buckets of focus. Interestingly, where we're seeing this work really, really well is when you actually start getting multiple stakeholders within a country all moving in the same direction, or within a region moving in the same direction. And so a good example of this is when you get supportive regulation, then the government encouraging either new issuances or a pension fund to invest in that specific space. And then that can create demand from the asset managers. And I think it was, as was highlighted by one of the panelists earlier, asset managers are incredibly pragmatic. If there's something that is logical and can make money, there will be products and there will be initiatives flowing towards it.
Yeah, I would just add to that. It's quite interesting to see where asset owners are moving in these markets. So whether you look at asset owners in Australia, the pensions in New Zealand, sovereign wealth funds in Southeast Asia, it's very interesting to pay attention to what they're putting out there in terms of their own investing policies, internal sustainability policies. That gives us some hints as to the direction of travel. And as more of those big assets move in the right direction, the smaller stakeholders in the market will also follow suit. So that's been quite interesting.
Right. And just to follow on to that, and again, my next question is actually for Yannick, but before that, what I would like to say is that as a capital markets guy, I speak to corporate clients in the region, and these days, ESG becomes like a topic in every meeting. But one challenging thing that I always get asked is really that a lot of our clients will say, so how can you really quantify the benefit to a corporate? So do we see like tighter spreads, or do we see better valuations? So it is always something that corporate clients are saying, look, I know it is important, but there's a lot of work that is involved. So tell me how to quantify the benefits. So maybe I'd like to turn to Yannick again, given Europe's longer history and much more developed market there, and his role in sustainability research. So what's your opinion? What would you say to a typical Asia corporate when it comes to quantifying the benefits? Do you see actual benefits from a valuation perspective, for example? And again, I think this would be something very interesting to see how we can draw some relevance from your experience in Europe.
Sure. To start with, I should say that I myself started doing ESG research back 17 years ago. And back then, it was very much a niche market with a lot of, ethical funds or investors who were more into, a philosophical approach of investment rather than anything else. And we always face the same questions about the benefits. And once we have been able to prove the clear relationship between taking ESG aspect into account and financial outperformance and better risk management, I should say it was the game changers. And if we believe that now ESG is becoming mainstream, is because if we have a pragmatic approach of what is the potential benefit of sustainability, if we discuss about the financial materiality of ESG aspect, and not from a theoretical perspective, but rather bringing some relevant KPI. I can talk about, green revenue shares of companies. I can talk about, controversies analysis and those kind of things. Then it makes a lot of sense. And if, for me, there was a boom over the last, 5 to 10 years toward ESG interest, it's because there is now this ability to prove the clear relationship between the two aspects. And as we said earlier, as Gabriel said and mentioned as well, investors are pragmatic. Once you show them a track record, real track record, and clear relationship between ESG and financial performance, then they will go for it. And they will ask for more information. They will ask for more insight about it. On the top of it, we can say that a lot of controversies are taking their roots into, ESG aspects of a recent year, which were not systematically covered by financial analysts. Same for new opportunities coming out of, regulations. So it's now becoming part, I believe, of the fiduciary duties of each analyst of taking those aspects into account. So we're not talking anymore about something, niche, but we're talking about something that has to become mainstream. And even if you look at, financial analyst qualification like the CFA and others, they have created a level 4 just to take systematically and to train people to take those factors into account going forward. So our conviction is that, yes, ESG makes sense. Financially speaking, this has to be systematically integrated into financial analysis because it's part of financial analysis. What is kind of missing right now is a clear understanding, a clear read-through, and an access to all the necessary information to make sure that we can evaluate and compare companies together.
I guess.
And if I can just add one point on that, on the piece of translating the non-financial into financial. So obviously on the company level, what we're seeing is that the companies are managing. Think about ESG as ESG risks and ESG opportunities. So companies that manage ESG risks and ESG opportunities better, what we're seeing is they generally tend to have higher profitability and lower weighted average cost of capital than the ones that don't manage those risks. When you put that into a portfolio, typically what we're seeing is that sustainable portfolios are outperforming both on an absolute basis because the companies are just higher quality companies. They're able to deliver higher risk adjusted returns as well. So you're getting just better bang for your buck. And on the flip side of it is when you look at the companies that aren't managing those risks well, those companies are being penalized by the markets. When you look at some of the incidents around, say, emissions fraud or accounting fraud or polluting environmental waterways or forests and so on, the markets are penalizing it as well. So this is a lot more in the zeitgeist now than it was before.
Right. I think this goes back to Gabriel's point about you need to have all the stakeholders at play at the same time just to make it work. I think it also depends on the market because if you look at in the likes of ADB, in the likes of IFC, they actually went out of their way to actually set up programs to provide some kind of grant in order to actually motivate issuers or corporates to have very focused ESG agenda. So I think a lot of work is being put in place, but I think in certain markets, I think it's probably slower than the more developed market in Asia. But certainly, would be keen to see when you have all the stakeholders aligned, the market will grow further. But now I would like to go back to John because given what he has just said earlier regarding the China market, I would like to see what he has to say about whether corporates in China, the fact that there's a lot of push, there's a lot of talk, although the governance is not there yet. Does corporate in your interactions see benefits in ESG and getting themselves catered to satisfy ESG requirement? So what do you feel from a China perspective? What the corporates are thinking? Hello, John. Okay, never mind. Maybe we'll leave it to later. So I guess being very mindful of time, I just have a few wrap up questions for the panel members, and one of which I would like to turn to Sunita, just to bridge to what you just mentioned. If you look at the development in Asia for the last 2 years, which is fast growing. So what is your view about the key theme in Asia over the next 2 or 3 years? Is there any particular theme that you think would develop out here that would be of interest for us to be mindful of now?
That's a $1 billion question, I guess. Look, I think I would just bring together some of the points that we said earlier around this idea of multiple stakeholders, multiple jurisdictions, and direction of travel. So I think the growth is there, the momentum is there, and despite the lower base compared to the rest of the markets, the pace of growth is very much in line with what we're seeing in the rest of the world. So I'm very bullish on that. I think in terms of broad themes, I would come back to this idea that sustainability is going to be integral to portfolios and the way money is run. So it's not a side issue. It's going to be a big part of it, which is why you need every piece of the portfolio. It's across asset classes. Engagement is a big piece of it as well. So that's the big theme, that this is mainstream, and it has to be across all, across everybody, across all stakeholders, and across all portfiolios. I know that's a very broad statement, but let's leave it there.
I also feel that it will be interesting to see how each of the respective local market gear themselves up, and certainly there's a variety of approach within each geographies, but it seems that at least from my interaction, I guess there are a lot more interest, real interest by the local regulators to develop their respective markets. So I think it would be interesting to see how the local markets also catch up, in terms of what we're seeing on the regional basis.
Yeah, I think that's a great point. So I would say that the way that different markets are going to incorporate the environmental and the social and the governance points, and specifically climate change, is really a response to how vulnerable those markets are to those issues. And so that will definitely affect the way that the markets evolve. So I agree with you that there's a lot of room for customization. And, as an asset manager, or coming from an asset manager, I would say that we have to be quite nimble and fluid, and make sure that we're able to respond to those needs as they evolve.
So if I turn to Gabriel, is that if you look at emerging Asia, so i.e. not including Japan or Australia, New Zealand, so which geography or country you believe would develop very distinct advantage in the region in sustainability in the near future?
Tough question. Partly because it's difficult to limit it to a single country because there's so much work going on across the region. And I think that there are different challenges that different countries face regarding ESG issues that they're trying to address. So it's difficult to stack them up on an equal playing field and say company A or B is going to necessarily be ahead or behind. I think that what we're seeing is really, really strong work on a combination of both governance issues to help drive economic growth and efficiency and increase the integrity of markets, as well as a focus on E&S issues in order to address environmental concerns, energy transition, climate change, and economic resilience from that perspective. So from that side, working on all of those issues, countries are setting themselves up very well in terms of building resilience for the future and trying to enhance the potential growth in the future. So I think it's difficult to highlight one as being a necessary winner amongst that group. An interesting point of contention that I've seen emerge over the last few years is growing competition amongst different countries to be a green finance hub or the green finance hub for Asia. And from my perspective, it's been really interesting to see that level of competition lead to more and more ambitious policies and developments within a few countries. And so from where I sit, that actually is benefiting the entire market as we see the bar continually be raised as these practices get implemented.
Right, thank you. And I think to that point, I guess certainly, I guess there is a lot of I won't say competition, but certainly a lot of work that is being put in place to be seen as more advanced in encouraging hubbing out of either Singapore or Hong Kong for green finance. And that will probably work for all these cross-border type of transactions. But if you look at, if the domestic market do develop, then certainly you then need to go down to the domestic market. And then the concept of hub may not really apply for those situations. But anyway, it will be interesting to see how all these things evolve. And yeah, please.
Final comment is that it's definitely a balance between what is applicable for the local market versus making sure that it is internationally consistent as well. And it can be a difficult balance at times, but that level of international interoperability or consistency amongst standards and approaches is becoming more and more important, so that we don't end up with fragmentation and increased complexity that could constrain capital flows towards sustainable initiatives throughout the region.
Right, right. So maybe a tricky question for Yannick for our final comment is that if you look at how Asia grow and given your exposure in Europe, so what's your sense? How many more years do we need, or how much more time we need, here in Asia to get us at par with what you're seeing now in Europe? Or you think this will never happen?
No, I believe it's going to be very quick. I mean, if we assume that ESG is becoming the new level playing field, even if regulation takes time, to be implemented, I think corporate will push, for more transparency, more reporting, to be eligible for investments. Because we've seen now, not only for, ESG mandate, but also for mainstream mandate, there is much more reference, to ESG aspects. So if you want to be within the investable universe going forwards, you need to show good faith, and you need to show informations, and you need to convince that you do care about ESG aspect as well as other companies. And you will then need to go for more reporting and more transparency. The main difference I see that will potentially remain is about more in terms of cultural differences. I mean, Asian people, European people, and US people don't think the exact same way. So
Right.
There will be differences in terms of identifying what makes sense, financially speaking, on the ESG side. Not only the issue by themselves, but also the weight to give to those issues. I always give that example if I have to compare Europe and US. When you ask US investor, what are for you the most important social issues? They're always talking about, minorities and diversity. Just to know, if I collect those information in French, I go to jail. I'm not allowed to. So this is where we stand. I mean, it's not only about your belief, it's also about, is it possible to capture this signal? And ultimately, is this signal making sense, financially speaking? So I think to have it, across the board, we need more transparency, more explanation on the rationale for each and every ESG aspect you would like to tackle, but we're all getting there.
Right. Thank you very much. And I guess, mindful of time, last but not the least, I want to have a final question for John. So, John, so where do you see the China market go? And one question that I did post earlier, but I guess you were offline, is really, does the corporates or the issuer borrower side see tangible benefit to allow not only having government initiative, but there's also a tangible need and tangible benefit that the corporates see in very much align themselves with ESG framework going forward? Do you see that market to develop, and would China lead in that, given the size of the market?
I think in the future, I think in the near future, we have seen the government has done many things, issued the guidelines, drafts to leading the market. And as you know, in China, most of the things, to be frankly, is driven by government. For example, I'd like to just tell the truth. For example, in the previous 5 years in China, we suffered from the air pollution. The huge problem. But nowadays, the government pushed this, and they issued the green bond on this to against with this kind of pollution. And they also encouraged the corporation, encouraged the companies to do the CSI and the ESG related business. So nowadays, the market changed a lot. Just I give you information that 25% of the listed company, they have declared ESG information, related information, while in which most of them is government holding company or related company. The size quite big. That means I think their size is the top company of the China. So that means that most of the top companies are aware about the benefit from the ESG and the CSR, such important since they have many business with the small company, business with the foreign company, business with the government. They more focus on the ESG now. So nowadays, also the investor also focus that since, as you know, more money comes to the China market, and we have the market is grows very quickly. So we need to find some big investments in China. So as you know, the state-owned company, the big company will be the target, will be very good assets, investor assets. So that means if the government drives and the big company drives, I think that in the future, the market will change a lot. And I think maybe in the next year, in 2021, I think the disclosure of the information, I would think it will be double, maybe goes to 50%, and the investment will be more easy.
That'll be really, really good. I guess this precisely echo what our other panelists said. I guess number one, I think Asia generally moving fast and catching up. And again, given the virtual size of China, we have all the stakeholders aligned. Hopefully, China will also take a very, very proactive approach towards ESG investing. So again, I have to thank all of you, all the panelists, for your active participation in this panel. I learned a lot from each and every one of you. And again, thanks very much for your participation. Thanks to the audience for your interest in this topic. And we have some time for Q&As, and I will pass this back to the organizer. Thank you, everyone, for your active participation. Thank you.
Yes, thank you all so much for your insights and fantastic session again. ESG is such a hot topic. We're very lucky to have, of course, some of our panelists here with us today now to answer your questions that have come in. I'll just dive straight in because, of course, you guys want to get your answers. The first question here was, what role can exchanges play in the advancement of ESG strategies across Asia? I guess because there's a lot of exchanges who are joining this event, and I think, Gabriel, you mentioned HKX. So I guess maybe this is directed at you.
Sure, and thanks for the question. And I think it's a really good point because it really talks to what different stakeholders can do. And I think that it's not just about one stakeholder. We need multiple stakeholders acting in concert. And if we think specifically about exchanges, some of the areas around laying the foundation of rules and requirements can be really supportive for ESG and broader green ecosystem development. And this is not just setting standards around mandatory disclosure or guidelines around whether it's SASB, GRI, or other international frameworks. As we saw from Hong Kong Exchange, adopting a governance focus to how this data should be released and trying to encourage and promote a stronger focus on materiality within firms and also board level oversight in directing and trying to understand what ESG issues are most material for them. And so what we've seen across Asia Pacific is a complete explosion in ESG data, and a lot of this has been driven by initiatives from exchanges trying to promote and enhance data. I think the next steps forward from here are really around moving more onto that governance piece and data quality and also standardization. Although there's a lot of guidance around releasing ESG data, a lot of this isn't on a consistent basis or between different countries, or it may not be comparable with international standards. And so from my perspective, harmonization of standards as well as a focus on corporate governance in really driving strategic engagement with ESG are some key issues that need to be achieved here. And of course, this needs to be balanced with company size and some other issues. So I completely recognize that there is a lot of complexity to rolling this out. But as an investor, those are the main areas that would be very, very beneficial for us. Something that the next question kind of ties into that, which is, there's a lot of talk about
standardization, and then the question is that what are some practical steps towards standardization?
I'm John. I thinking that the practical step for the standardization, I think we should, especially I just like to say, especially in China market, I think two key factors we should consider. One is from the regulator side. Regulators should learn more on the ESG and introduce the mature, the international standard and the international methodology to the market participators. Should show the experience, including the list company and also the investors. This is very key. This first step. And the second step, I think also should encourage the big company, especially in China, the state-owned company, big company, and the long-term investor, to encourage them to take the practice standardization. I think these two key factors very, very key. This is my view, only for China. Okay, thank you.
Yannick, any maybe like a wider view on that, or?
Sure. So clearly standardization is needed because a lot of corporates are struggling, because depending on who's asking the questions, they might go for different themes or different metrics, and it can be a bit complicated, to have all those sets readily available for all types of investors. So I think it will start with some education, transparency, and rationale that should come from both sides. Investors, they need to tell corporates if they need some specific information, what is the rationale for it, and from the investor and corporate, because corporates as well, if they disclose information, they should justify why do they provide those data specifically to the market. So I think we're getting there. There's a lot of, initiatives such as the GRI, Global Reporting Initiative. There is SASB in the US as well. We're, trying to identify, big themes and big metrics. So it will take some time. And as we said previously, there will always be some cultural biases that we need to go with. But we will get there. I'm pretty convinced about that.
Would you please share some experiences?
Yes, maybe. Typically,
company Thailand JV. I think Augusto, didn't you? Because you mentioned grants before and the bonds.
Yeah, I think standardization is certainly a very good way of looking at this going forward, because certainly, if there is standardization, it just make it easier for investors or issuers to actually comprehend. So if you look at issuances on the bond side, I guess over the last 2 years, I think we are now seeing convergence in terms of standards that people are using. Of course, some of the local market may vary, but I think the standardization would actually encourage more participation from the market, which I think is really something that regulators and exchanges can actually help to facilitate.
Do you think that a lot of the projects because I know that Augusto, you guys have done something with the green bonds. Do you think something like that would be replicable in other markets or not?
I think so. At least we are trying to. So we are trying to replicate that across the countries that we have a presence. We are also trying to test various ideas. For example, last year we worked with IFC to actually do a gender bond for our affiliate company, Country Bank. So with that, we actually gained some experience in terms of how a institution like a Country Bank approaches this, and we tried to see whether we can replicate the same in other markets as well. So I think that
that experience will also allow us to see what may work and what may not work, and hopefully we can see more variety of products that can be developed in this region.
So it might end up being a bit of a global, local situation where you find things that have worked somewhere else, but then try to give it a local twist.
Yeah, I guess that is true, and that is precisely why I guess we're keen to draw some insights from Yannick, for example, because we are always trying to look into other regions for experience, and certainly the European market is a lot more developed. At least for my organization in Asia, we consult and draw experience from our European colleagues a lot. So when we actually did a recent transaction, a couple of transactions in Thailand, for example, we actually have to get our colleagues to join our discussions with clients. At least me and my team was very thankful because they have to work during Asian hours while they're in Europe. But again, we need to draw on those experience, and those experience will actually help us at least avoid some roadblock sometimes, because it has been tested already in Europe. So I think that experience will be extremely useful, and that is all about global connectivity, trying to see what we can actually replicate from experience elsewhere.
I'll move on to the next question. How to tackle greenwashing issue? I guess it's also kind of linked to the data, which was brought up earlier as well. Like managing the greenwashing issue is related to how can you get the right data, and it seems to be like a forever problem. Are there again practical steps that people could be looking at, or like working closer with their clients or with their investors early on to kind of explain everything?
I can take that.
I can take that. Oh,
please go ahead. No. Go ahead. I will follow up. Please.
I'll try to give my perspective on the matter. Not going to deny that greenwashing exists. I think that's part of the struggle with something becoming so trendy, and that a lot of people, funds want to jump on the bandwagon. Morningstar has done some research around the recent name changes in funds to include the word sustainable in them, to sort of catch this trend, if you will. I think it comes back to this point about transparency. I mean, and I'm a little bit biased because I come from the index space, the ETF space, where transparency is basically a given. You know exactly what you're investing in. You can see the holdings of the fund. You can see the index that the fund is tracking. And once you know the index, you actually know the methodology of that index and how it creates a more sustainable portfolio. So I think if you're the investor and you're trying to figure out whether the fund you're investing in is legitimate or engaging in greenwashing, there are a couple of things to look out for. One is what are the sectors or business activities that the strategy is excluding? Is it an exclusionary strategy? If so, do those screens make sense for you? Do they resonate with you as an investor? For instance, if you care about the environment, perhaps you want to look out for funds that have certain minimal thresholds for emissions, or fossil fuel industries, for example, whether they screen out thermal coal or oil sands, for instance. If you're a very values-oriented investor, socially driven, perhaps you want to check whether the strategy has a stance on things like alcohol, tobacco, weapons, and so on. I think these things should be publicly disclosed anyway, and if they aren't, then that should raise some eyebrows. And then beyond that, you want to look for what sort of strategy the fund or investment is using to move towards sustainability. Is it overweighting better companies and underweighting less good ESG companies? Is it excluding certain companies on the basis of their ratings or ESG thresholds? And the final point is, what does that provider, what does that fund house do in terms of investment stewardship? Because if you're going to invest in a wide, diversified portfolio, you're going to need the fund house to do some engagement efforts, because that's a big way to drive corporate change. So that's my perspective. It's, I think, more and more participants in the industry are moving towards transparency and disclosing what they do with their strategies. So I think if you ask the right questions, you can get there. Over to you, Yannick.
Thank you. Yeah, we'll add to that. I mean, for me, there are two different cases. Either someone is trying to fool the market. I mean, potentially corporates will provide non-relevant information because they don't have the right ones, or they're not able, to provide you with the good information. But this is, for me, pretty much a picture of the past. I mean, we can easily find, looking at, best practices among sectors and among companies. I think it's easier now to single out what makes sense, to be disclosed. And there is a lot of, naming and shaming exposure, for company trying to greenwash on those issues. So it probably still exists, but for me, it will disappear with time, with more education, with more transparency, with more global guidelines in terms of what makes sense, and with a lot of trainings coming from the corporate and from the investor side as well. I think we'll go to a right set of indicators to be globally provided.